In the energy quadrant today, taking a look at the October crude oil contract, which actually hit its lows about 4 a.m. Eastern time this morning, a little bit earlier than that, went down and retook that 67 level, falling into the 66 handle, then rallied back up in the early session, falling in toward the EIA report, and then rallying back up to form another reversal after that EIA report, which was a little bit bullish. This continues this week's strong rebound, even though today wasn't a massive up day. If you look at it on a weekly basis, you're looking at basically last week's sell-off, which was over 9%, being the worst sell-off we'd seen since late October 2020. This week so far has reversed almost all of that sell-off. We're almost back to where we opened up the previous week. So a pretty strong week so far. Still 2 trading days to go. The EIA released the crude oil inventory report today, and it showed a draw of 2.979 million barrels versus a forecast of a draw of 2.638 million barrels. Last week was over 3 million of a draw. Also, gasoline inventories showed a draw of 2.242 million barrels versus expectations of a draw of only 1.557 million barrels. Last month showed a build of almost 700,000 barrels. So the gasoline and the crude both beat expectations in terms of positive news for crude oil from the demand side. But also you have to look at refinery utilization when these numbers come out. Refinery utilization ticked back above 92, which is a good sign considering we're getting close to the season of turnaround when they're going to reduce the usage of some of these refineries ahead of the winter blend gasoline. So refinery adjustments, retooling, and maintenance will go on. Today we saw it tick back above 92, falling back, I should say, into the 91 range in the first week of July. So it's a good sign overall for demand from today's EIA report.